Hello traders, it's Tuesday, August 15th. This is Alan Hong, market analyst of GKFXPrime. I'm gonna share my daily analysis through this video. So first of all, let's review the major market movements. And the first instruments we're referring to the dollar index in 4-hourly chart. So the US dollars, which measures the greenback's rank against a trade weight basket of 6 major currencies, was rose against a basket of global currencies on Monday, up 0.3% to 93.29 as geopolitical tensions ease between the US and North Korea, while upbeat Japanese economic data lifted sentiment on risky assets. So the US dollar's pair losses following a slump on Friday after the safe havens currencies like yen and Swiss francs gave up recent gains as the investors welcomed comments from the US Defense Secretary Jim Mattis and Secretary of State Rex Tillerson downplaying the risk of imminent war on the Korean peninsula. So according to the official state, the US has no interest in regimes change or accelerate reunifications of Korea and do not seek any excuse to garrison US troops north of the demilitarized zone. While the safe haven currencies, the pair USD Swiss francs was rose to 0.9708, up 0.95%, while USD JPY was rose 0.23% to 109.45 on Monday. So this is bolstered by the solid Japanese economic data, which pressured the yen to session lows against the greenback. So Japanese second quarter growth expanded 1% quarter-on-quarter on the back of a rise in consumption and capital expenditures, beating economists' forecast of a 0.6% increase. And the oil-sensitive Canadian dollar came under pressures amid a slump in oil price, with the pair USD CAD gained 0.2% to traded around 1.2704 on Monday. Having a tap in commodities markets, the gold price was retreated from 2-month highs on Monday, fell $4.10 or 0.3% to $1,290.16 a troy ounce as the risk appetite returned. So it was after the tension eased between the US and North Korea and following comments from the US officials downplaying the prospect of war on the Korean peninsula. So the gold price was eased from 2-month highs as investors cheered the comments from US Defense Secretary Jim Mattis and Secretary of State Rex Tillerson, which downplaying the risk of imminent war on the Korean peninsula. So losses in yellow metals, however, were limited as sentiments on tighter monetary policies remained subdued, following data on Friday showing the slowdown in inflation continued in July. So the minutes from the Federal Reserve July policy meeting due Wednesday, at which the central bank left its benchmark rate unchanged, could offer further insight into the prospect of additional monetary tightening later this year, as well as the central bank plans to reduce its 4.5 trillion balance sheet. So the gold price is sensitive to move in the US rates, which leave the opportunity cost of holding non-yielding assets such as billions. And the crude price was settled lower on Monday, fell 2.5% to settle at $47.59 a barrel as data shows Chinese demand for oil was eased in July, while concerns over a rise in OPEC output continue to weigh on sentiment. So Chinese refineries processed 10.71 million barrels per day in July, and National Bureau of Statistics data show that's down around 500,000 barrels per day from June and the lowest rate since September 2016. So the nearly 12-month low for Chinese refinery activity comes against concerns that a glut of refined fuel products could lessen demand for oil, reducing the prospect of oil inventories falling below the 5-year average, and this was adding further pressures on oil price. But meanwhile, investors continue to mill over data released last week from OPEC and the International Energy Agency, showing an uptick in oil productions from the cartel in July to 33 million barrels per day. So in May, OPEC producers agreed to extend production cuts for a period of 9 months until March, but stuck to production cut of 1.2 million barrels per day agreed in November last year. So meanwhile, oilfield service firm Baker Hughes reported on Friday its weekly count of oil rigs operating in the United States ticked up by 3 rigs to a total of 768, suggesting that US productions may start to taper. And according to Phil Flynn, a senior market analyst at Price Futures Group, said in a daily email, the slowing rig count will mean that US production will start to level off and drop. So now we're gonna take a look for the highlighted economic data and event that released on Monday, as well as the focus data and event for today. So yesterday, Japan was released its second quarter GDP, and it was at 1% growth, which is much more better than the expectations of economists. And besides of the GDP of Japan, China was released its industrial productions for July as well. It is a disappointed result with 6.4% growth compared to the expectations of 7.2% growth. So as for today, during the Asia's morning hours, Australia was released its meeting minutes, right? So during the European trading hours, Germans will going to release its GDP for second quarter, and it is expected to be slightly battled from previous 0.6% growth to 0.7% growth. Right, and besides of Germans, United Kingdom will going to release the consumer price index for July, and it is expected to be better as well from previous 2.6% growth to 2.7% growth. So later tonight during the North American trading hours, the United States is going to release its core retail sales as well as the retail sales. So both of these retail sales data is expected to be battled. And now we're going to check out the technical analysis, and first instruments we are referring to the GBP USDs. Right, so the pair GBP USD was remain traded in an uptrend, but is still retracing and traded below the both moving average line. So a price closures above 1.31100 is a signal for it to continue its uptrend. Otherwise, closures below 1.29200 suggest to retrace more in short terms, and the next target of resistance level we can refer to 1.31000, and the next support level we refer to 1.28500. While the euro remained traded as an uptrend against the US dollars, but seems like losing momentum, so it is expected to be ranging between 1.17200 and 1.18400 for short terms. So a price closure above 1.18500 signals to move further higher towards the next target of resistance level at 1.18800. Otherwise, closure below 1.16800 suggests to experience a short retracement periods and fall further towards the next target of support level at 1.16100. So the price was retraced from the highest levels of the range, and so then it is expected to be moved slightly higher in short terms towards the lowest level of the range at around 1.17300. Meanwhile, the Kiwi was traded in a downtrend against the US dollars, but the downtrend was seems like losing momentum, so it is expected to be ranging between 0.72800 and 0.73200 for short terms. So a price closures did above 0.73300 is a signal to experience a retracement in short terms and will move further higher towards the next resistance level at 0.73600. Otherwise, closure below 0.72500 suggests to continue its downtrend and drop further towards the next support level at 0.72200. So referring to the both moving average line which pointing downwards, okay, and expanding are following the dive cross that formed previously. So these are the signals for the pair to move further lower following the downward trends, okay, following the downward trend. It's just that for short-term movement, we're referring to the MACD. The both movement line now is pointing upwards, okay, and the momentum is growing. It's above the level of 0. So that means that in short term, it might probably to move slightly higher. We should wait until a retracement from higher level, then only we follow the downward trends. And as for the OZ currently remain traded as an uptrend against the US dollars, but is still retracing. So a closure above 0.79500 is a signal to continue its uptrends and move further higher towards the next resistance level of 0.80500. Otherwise, closure below 0.78100 suggests a change for trend directions to become downtrends, and probably will fall further towards the next support level at 0.77600. For the Japanese yen, it is remain traded downtrends against the US dollars, but it is retracing now since following the price closure that's above 110.200. Right, so it is expected to move further higher towards the next resistance level at 110.900 in short terms. Okay, so it will be taken as a short retracement periods. Okay, short-term retracement periods. Right, so but then it is still remain traded in a downtrend. So after the price closures below the 108.700 levels, then it is expected to move further lower towards the next target of support level at 108.200. As for commodities markets, the gold price remained traded in an uptrend, but seems like losing momentum. So a price closure below 1,271 signal to experience a short-term retracement period and fall further towards the support levels of 1,259. Otherwise, it is expected to be ranging between 1,272 and 1,291 a troy ounce for short term before it continues its uptrend. As for the oil price, the West Texas Intermediate in 4-hourly charts, it was felt sharply on Mondays, okay, and the both moving average lines was form a dive cross and pointing downward now. But the instruments is remain traded in an uptrend. It's just that all this signal from the indicators is indicated that the instruments currently experience a retracement period, right? So a closure below 47.2 is a signal to retrace more in short terms and fall further towards the next support level at 46.3. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.